At ISEC, it's our absolute pleasure to host the management for the call today. Today, from the management, we have Ms. M.R. Jyothy, the Managing Director, and Sanjay Agarwal, CFO. Over to the management for the opening remarks, and we shall open it up for Q&A after that. Thank you.
Thank you, Manoj. Good afternoon, friends, and thank you so much for taking time to be with us on this call today. Hope all of you and your families are safe. Unfortunately, due to COVID and its variants now, we are witnessing again disturbances in our lives, and consequently the economic activities are getting impacted. We are, however, hopeful that with the resilience of our portfolio and our team's commitment, should be able to face this period. Friends, we had a strong start to the year in quarter 1 and quarter 2 with 21% and 16% revenue growth respectively, and with a similar momentum, happy to report quarter 3 FY22 we have achieved 13.1% revenue growth, which has a volume growth of 7%, and for the YTD 9-month FY22 our top line growth is 16.7%. Even we analyze it on a 2-year CAGR basis, we have been consistently delivering double-digit growth for the last few quarters, which is backed by our relentless focus on execution, or the way we look at it is focus on everyday execution to build scale with agility, and which is what has helped us in gaining market share across categories. And this growth, or this quarter growth of 13%, is on top of 15% growth we had in quarter 3 of FY21. Now, obviously, this has been achieved in spite of challenging higher input prices, which is resulting in increase in the retail prices, and it does impact the consumer purchasing power. So, overall, with all those macro environment, our portfolio, which is more essential day-to-day household consumption, we are witnessing stable consumer demand. The consumer sentiments, I would say, are mixed because one, the economy is getting normalized, but at the same time, higher inflation is adversely impacting the monthly household budget of the consumers. Now, for this quarter, there was an increased mobility when we look at it from October to December 21. There was a stabilization in all the distribution channels, specifically on modern trade and CSD, which we had seen were impacted for large part of last 18 months. However, as we speak again in the month of January, there have been some disruption. The footfalls, I presume, they are coming down in modern trade and CSD channels. From the urban-rural, they both continue to do well. We believe the fundamentals of our consumption story for India is intact. We are focusing on the potential of rural growth with the addition of rural stockists, van operations, adding more sales team on ground, which is giving us a sustainable advantage and growth. We'll continue to focus on distribution, digital expansion, on our innovations, and all these, focus on all the channels and also urban and rural at the same time is giving us a good double-digit growth for the quarter and as well as on a 2-year CAGR basis. Higher raw material prices have impacted the margins, which is a matter of concern, but we have been managing it with calibrated price increases and several inward-looking cost rationalization measures. We'll continue to focus on technology, which will help us in our distribution, supply chain, and improve productivity, because in this environment, the most important thing is to manage or maintain a good balance between volume growth, market share, and margins. As you would have again observed in our results, there's been a pressure on margins, but still we are focused on promotional activities. We've been judicious on our media spends to support our full business potential of our brands and distribution, and which we believe will give us significant benefits, which are giving benefits now and in future to to enhance the long-term shareholder value. A quick summary on our financial performance. This quarter we have grown by double digit. All categories have also witnessed double-digit growth even on a 2-year CAGR basis. So that is very, very important for us, because if for the last 6-7 quarters we had a double-digit growth, it becomes a habit or a practice for us to work hard and make sure that the business is going from strength to strength. However, as we see, the margins have declined, and that's because of the increase in the unprecedented input prices, and our EBITDA from historical 15-16% is at 11.3% this quarter. Now, this is a concern for everyone, and it's an industry-wide issue. We have partly mitigated it through scale leverage, a lot of cost optimization projects, and price increases. As we have highlighted in our presentation, the input prices for key raw materials, which we have put down all the prices for the last 18 months for palm oil, lapsa, HDP. Everywhere the prices have sharply increased by anywhere between 60 to 100% in the last 18 months. Now, in spite of all the challenges, we are trying to ensure that the products are available, and we still maintain the assured quality despite the increase in the input costs. So, another data point, just for your benefit, input prices as a percentage of turnover has increased by 14%, and we're taking more calibrated price increases. We have taken till Q2 and Q3. As we see further pressure on margins, we have been taking further price increases, and they are in the pipeline. And but the one thing, important thing is we've seen good demand for our products. Obviously, the execution is driving. Most of the growth is coming from the execution, and which is helping us gaining strong market share. And we don't want to break that momentum, which has been built with a lot of hard work. We'll further focus on product mix and SKU rationalization, which can further offset material cost pressure. To continue our sales momentum, our A&P spends for this quarter has increased by 7.4%. It's a percentage to sale, it's at 7.4% versus 6% we had it last year, and which is an increase of 43% for the 9 months ended December 21. So the key thing is to keep investing behind the brands and focus on distribution, which is helping us gain market share across all categories, which validates our strategy. I'll spend a few minutes just to give you a deeper insight on quarterly performance of all our categories. First is the fabric care. It's done well with 18.8% growth this quarter and a 23% growth for the last 9 months. If we go a little deeper into it, post-wash, which is Ujala fabric whitener, has achieved pre-COVID levels, so it's doing well. Crisp and Shine is still to achieve normal sales, maybe another quarter or two once the mobility becomes normal. Ujala IDD, we have extended it to West Bengal and received good response. Ujala Liquid is also doing well. So from that perspective, I think the fabric care portfolio has done well. And the challenges we were earlier seeing because of the CSD and modern trade not operating, or the metros having large format stores, since that has come back, overall fabric care businesses has done well. On dishwash category, which has been doing very well for us, both Exo and Pril continue to do well, and we've been having double-digit growth with hygiene focus and our brand positioning. We've been increasing our marketing spend both in Pril and Exo. Last time we spoke about it, we've got a new brand ambassador for April, Ritesh and Janelia Deshmukh, and you would have observed in a presentation, our market share has been gaining every quarter on Exo, from which used to be 11.3 in 2019 on a pan-India basis. Now it is inched up to 13.7 as we speak. So this is a significant improvement, and we would really focus on it to keep growing this our dishwash category. In household insecticide, again, our automatic liquid vaporizer machine is picking up good growth across different markets. And again, this is the first time when we have hit a double-digit market share on a pan-India basis on liquid vaporizers. So now we are at a 10.2% market share versus we used to be in 8.5 in calendar year 20. So, we have been speaking about it, that we've been focusing on it. We've been overspending on liquid vaporizer so that we get our product across to the consumers, and which has really worked well. And even on a 2-year CAGR basis, we have delivered a double-digit growth. So we're very happy that liquid vaporizer is doing good. Finally, personal care, which is our Margo franchise, a lot of groundwork or ground activities are underway to celebrate our 100 years of Margo. And it's doing well. It had a flat growth this quarter. However, similar last time, same quarter, we had a 48% growth. So overall, on a 2-year CAGR basis, it's grown by 22%. So healthy performance on personal care as well. So in summary, we are focusing on a tech-led distribution, focusing on increased media spends in spite of all the challenges. We want to build a volume growth. We want to build scale, and it is evident from the higher revenue growth we have been seeing for the preceding 6 quarters. And this outperformance in our product portfolio, revenue growth will lead into market share gains, and the brand building, investing in the front end, which is strengthening the distribution and adding manpower on ground to enhance market execution. So those will be our strategy as we move along. So with that, on that optimistic note, I will finish my opening remarks, and we are happy to answer any questions or clarifications you may have. Thank you.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If your questions have been answered and you wish to withdraw yourself from the queue, enter star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, you may enter star and 1. We have the first question from the line of Percy Panthaki from IIFL. Please go ahead.
Hi team, good evening. I just wanted to understand the pricing action. So I believe in this quarter we have a YOY pricing of about 6%, but some of it would be taken during the quarter and would not have fully affected Q3. So if I take that into consideration, what kind of YOY pricing growth will we have in Q4?
Right. So Percy, I get your question. As you rightly understand, the pricing which was taken somewhere in end of Q1, Q2 is what got affected fully in Q3. As we speak, on an exit basis, our price increase would have been in the range of around 8%.
Okay, so around 8% is what we will feel fully in Q4.
That's right.
Okay, and that would still not be enough to really counter the cost inflation, that is clear. But what I wanted to understand is that the incremental 2% pricing that you will get from Q3 to Q4, will it at least offset any incremental cost inflation from Q3 to Q4? So what I was just trying to understand is that as we go further into the future, not too much into the future, I'm only talking about Q4 now, should we see the EBITDA margin adjusted for, of course, seasonality improve versus what we have seen this quarter?
Yeah. So there will be margin improvement, Percy, and we are all focusing on improving our margin profile. And internally, we want to go back to 15% EBITDA margin as early as possible. So as what you rightly said, yes, we have already taken some measures of price increase and other measures which will obviously get translated in Q4. And as and when, if other prices keep increasing, we'll take another further price increases and other measures which we need to do.
Okay. Secondly, just wanted to look at your fabric care segment. You are given YTD 2-year CAGR of, I think, 4.6%, if I'm not mistaken. So, which is relatively the slowest growing segment in your business. So just wanted to understand what is holding back the growth there, because the market leader is really doing fairly aggressive growth in the fabric care segment.
So, Percy, hi, Jyothy here. This fabric care segment, if you remember, it has been hit last year, especially in the post-wash segment, and some of which we are recovering this year in Ujala fabric whitener. While Crisp and Shine, which is again a post-wash, continues to be it is improved, but it is yet to see its full glory, mainly because the schools are shut. The offices are partly open, partly work from home. So this specifically caters to workwear and schoolwear and things like that. So once those things start fully, that should come back. And we also had seen some institutional growth not happening last year, and hence it has affected the thing. But once things open up, all of this will be coming back in its full glory. Yeah.
And if I look at only the detergent segment of your fabric wash, I'm not asking for any exact numbers, but could you give some color or sort of some brief idea on how better the performance is there versus the overall fabric care?
Yeah, so we are growing in double digits in detergent segment. We have also launched our liquid last quarter under Ujala, and we have just about yesterday launched our liquid detergent in the Henko segment as well in the south. So going forward, we'll be getting growth where we are seeing a shift from powders to liquid. We'll be capturing on that growth as well.
Understood. And my last question is on the overall demand environment. There are certain companies which have flagged off slowdown in the general FMCG growth. Of course, last 3 quarters you have performed exceedingly well. But is there any risk that the top line growth really falters in Q4 because of whatever reason, either because of any pipeline adjustment or because of end consumer demand? Because right now, what is really going for you is the top line growth. Margins have been very badly affected, probably the worst among entire FMCG pack. And if the top line growth also falters, then that will be a little premature before the margins have sort of recovered. So just wanted your view on that.
Yeah. So Percy, we are actually frankly, we don't want to be bothered by what's happening, and we want to focus on our activities like increasing stock fills, and for us there's a lot of miles to go. So in that sense, we would want to focus on increasing outlets and getting channel partners on board, and our focus is on distribution. While this inflation, yes, to an extent, maybe if from a long term, if it continues, could come in the way. But we have seen growth in urban this quarter, especially because of the festive activities, all the pending demand coming up, and maybe it could affect, but our work and our focus on growing in double digits will continue.
Right. But as of now, there is no sort of early warning signs or any sort of reason to believe that Q4 is going to be affected quarter in terms of top line trajectory.
No, as of now, not much.
Okay, that's all from me. Thanks and all the best.
Yeah, thank you.
Thank you. Ladies and gentlemen, to ask a question, you may enter star and 1. We have the next question from the line of Kaustubh Pawaskar from Sharekhan by BNP Paribas. Please go ahead.
Yeah, good afternoon. Thanks for giving me the opportunity. My question is again on the fabric care and more towards the revenue growth. So this quarter we have seen double-digit growth, and you alluded to the point that because there was a improvement in footfalls and mobility and out of consumption, home consumption also improved. So that led to the improvement in the fabric care category growth. But now since because of the Omicron there is restrictions on mobility in most of the states. So considering that, should we expect the fabric care growth to moderate, and overall it will have impact on the revenue growth?
No, nothing like that, because we haven't seen other than institutional, which could happen, some slowdown there, but largely there has not been any other than the schools and offices, which affecting one category for us, as in one brand for us. There specifically, otherwise we don't see that much of an issue there.
Okay. And you just mentioned that distribution is something which you are focusing on. So in last month, can you just let me know how, what kind of distribution addition you have done on the retail side?
Yeah, so it's mainly, I've spoken on increasing the outlets right from the beginning of the year, right from April. We were somewhere at, 8.5 lakhs, and we have crossed 1 million outlets by now. And our focus is to keep increasing the number of outlets from now on. So we have hit the 1 million mark, which we wanted in a long time. That's direct coverage.
Right. So any target as such that after 3 to 4 years you want to increase your outlets by this much a million? Any specific target internally you have to reach?
Target is in the mind. I wouldn't want to say. We would want to benchmark the industry leaders there. So it's a journey, and it will be always on an increase. I would say in the next at least 4-5 years we have to be at the leader, at the market leader levels. Yeah.
Okay. Thanks for that.
Thank you. To ask a question, you may enter star and 1. We have the next question from the line of Mr. Manoj Menon. Please go ahead.
Hi, team. Just when I look at the volume performance, for the 7% volumes which you have delivered in the quarter, if you could just help us understand, the 5-6 categories which you have, which has been the ones, let's say, which have grown in double digits, and which are the ones which are, the best 3 and the bottom 3.
So, Manoj, your question is this volume growth, is it in which particular category is it more? Is that your question?
Right. So, Sanjay, the basic assumption here is, let's say the core Ujala, really would not have grown in volumes, right? So, apart from that, I'm just trying to understand, of the 7%, is it truly broad-based, or, are there a few categories where you are, seriously outperforming, and the few ones which you, need to improve?
No, so there is nothing where we are concerned. Just in terms of numbers, dishwash obviously has done much better, followed by fabric care, and then personal care and HR.
Sorry, just could you just repeat that? Dishwash is the best performer?
And then fabric care, and then you have HI and personal care.
When you say fabric care, this is fabric care minus, the core Ujala, right?
Correct. Correct.
Okay. Understood. And secondly, just saw an exchange, announcement about Mr. Ullas Kamath not seeking, the reappointment or extension. Any comments from management would be helpful.
So the thing is, if it would mean an extension of 5 more years, and he wanted to, pursue, come off from the executive role and to focus on things closer to his, passion. While he'll always remain with us as a family, and he's just a phone call away, he'll also be presently continuing on the JFSL board, and will be taking care of that business.
Understood. If Ullas sir is there on the call, just want to put it on record. Sir, thank you so much. We have truly learned a lot from you and had, really enjoyed interactions with you. You have been one of the nicest corporate managements I have interacted with. Thank you, sir. And the third one, question or a clarification which I wanted was, look, I think there is this big narrative of D2C, digital native, et cetera. But from your vantage point of your portfolio, are there, these sort of, let's say, quote unquote, perception of disruption actually happening in your categories?
So yeah, Manoj, I think it's a very good question, and it's definitely fashionable, and everybody wants to look at D2C. And there's nothing for us also not to evaluate that. We have multiple brands, and different brands have a different growth plans. But we also have to evaluate whether there is a good value in those D2C brands, or is it only about valuation and the hype. So we will be focused on every new opportunity which are there in the market, whether it is alternate channels, whether it has been e-com, and whether it is now D2C. So it's there on our horizon, and as and when we think there is a real need for us to go into the market with that, definitely we'll do it.
Understood, Sanjay. No, actually, Sanjay, my question was more from the point of view that, the D2C, DNB, etc. Appears to be, that's something I wanted your view, as industry experts out there, is that it appears that it's more on the personal care side and some on the functional food side, etc. I'm not sure it's actually, is there anything material which is actually happening on D2C, DNB on the fabric care and the home care rather, not just fabric care. Just wanted to your views on, is it happening, or how do you look at that? Is that because let me put it this way: can I make a statement that, let's say, your portfolio is possibly the least impacted because of D2C, DNB, which is happening in the market? Will it be a correct statement to make?
So Manoj, you are right. Most of these brands are consumers will pick up on the D2C platform where these are more involved categories. So while you're choosing your body lotion and cosmetics and things like that, definitely there is a lot of comparisons which you do while you pick up any of the stuff, and hence there's been more of those brands or in D2C channels. While we have been focusing, or we had, or our portfolio is more focused on fabric care, dishwasher, detergents and stuff like that, and HI, there's not much of D2C brands penetrating. So I hope that answers your question. So you're right in your assessment.
Understood. Thanks. I'll just get back in the queue. Thank you, team.
Sure. Thanks.
Thank you. Participants, if you have a question, you may enter star and 1. We have the next question from the line of Selva Muthukumar, an investor. Please go ahead.
Very good afternoon. Good evening to management of Jyothy Limited. For congratulations of excellent set of numbers. So I have 2 questions regarding Margo market share. What is the present market share? What is the growth rate compared year on year? Flat growth. So do you have any specific plan to increase market share in Margo segment? And second question regarding how much cash available in book. Any inorganic acquisition possible within 1 year? Thank you. Thanks a lot.
Yeah, so we don't subscribe to the Margo market share data, but the brand has seen 20-22% CAGR growth in the last 2 years. So the brand is doing well. This quarter was flat more so because this brand especially, for this brand, it does well in the other 3 quarters, and the winter season is usually not so great in terms of this thing. Last year we had a 48% growth in the brand, and this year, because of the early onset of winter, it did suffer a slight setback, but in spite of that we have delivered some bit of growth. But if you see on an overall basis, 2-year CAGR, we have delivered 22% growth. In the cash.
Yeah, and the second question what you had is we continue to be a net debt-free company, and acquisitions, yes, it's something we have it on our horizon, but we want to get it at our terms in the sense of pricing and the categories in which we want to be present in. So it's a deep search which we'll have to do, and at the relevant or once we are ready with it, definitely we'll be able to share more about it.
Okay, thank you, sir.
Thank you, sir.
Thank you. Ladies and gentlemen, to ask a question, you may enter star and 1. We have the next question from the line of Aniket Sethi. Please go ahead.
Hi team. So on the rural distribution bit, so one thing is you mentioned about addition of rural stockists. So if you can kind of quantify it, so how are we increasing it, or are we kind of going much deeper in terms of our reach? Second, in terms of the van sales, you mentioned briefly in your opening remarks. Is it a meaningful contribution currently? What are the costs of doing business this way, and what are the plans over here?
Yeah, so rural stockists in last 1 year we would have added another 500 sub-stockists, which really helps us in good line of sight in the products which we are selling deep into the villages, say population up to 5,000. And van operations and mopeds and all is to facilitate those sub-stockists in that market so that we can penetrate lot of LUPs, and so obviously we have to evaluate the cost benefit analysis for us, and we've seen good ROIs for the investments we are doing both on adding manpower in rural areas and van operations.
Okay, but have you been doing the van operations in some time now, and the plan is to probably feed the wholesale channel from this?
It's not feeding the wholesale channel. It is feeding more of the areas where the sub-stockists find their challenges in reaching into the 5,000, 10,000 population areas. So we're just helping them in getting there so that our penetration increases.
Understood. Second, on the dishwash piece, so if slightly longer time frame, say 1 year or say 18 months, if you can kind of say qualitatively dissect the growth between EXO and Prill, because on a market share basis at least the growth of Prill seems to have kind of come off. Prill we did quite some time back, did some launches, variant launches, and it took off quite well. So anything different or divergent over there since the last year or so?
So both Prill and EXO have been doing well. Prill is more metro product, urban market, e-com, while EXO is focused on rural areas, 5 rupee, 10 rupee, and we're focusing on it because the LUPs help us in accessibility of our products in that market. So both have a very different focus as we speak.
Yeah. Also, modern trade and e-com has a larger share in terms of liquid sales. So any impact on those channels, last year, those would also kind of impact this thing. But we have seen double-digit growth in both the brands.
Understood. That's reassuring. So thank you so much, sir.
Thank you. Ladies and gentlemen, to ask a question, please enter star and 1. We have the next question from the line of Gaurav Jogani from Axis Capital. Please go ahead.
Thank you for the opportunity, sir. So my first question is with regards to, it clearly seems that only with an 8% price increase so far, the focus is clearly towards driving the volume growth over the the value growth as of now, absorbing some part of inflation. But sir, any guidance or any help that you can give us in terms of till what level can this continue, and beyond which level in crude is what you might lead to further price increases?
So, as I said earlier, Gaurav, the focus is to improve the margins as well, as we have been doing very good on top line, market share, increasing our media spends, and it's giving us good return on investments. Now, on the margin side of it, as we focus on it to improve it, internally we want to be back to 15% EBITDA margin as early as possible. And I mean, given where we are today and seeing some of the key raw material prices still going up, it's difficult to give you a time frame in which we will be there, but all our efforts are there to get back to that margin profile soon.
Sure, sir. I understand that. Sir, in terms of the HI piece, again, it's very heartening to see that you now have reached the double-digit mark in terms of the LV machine now. Sir, but could you help how the incense sticks are there now? Have they come back? And how is the market overall growing for the HI segment?
So incense sticks obviously has been there for a period of time. It had come down because those illegal manufacturers could not produce during the peak of COVID. They are there. I mean, as an association, we have been taking lots of measures to bring them down. It's not growing at the same pace what one had seen 2 years back, but they are very much there. It's unfortunate, but so be it. So the growth rates are, in an India environment, there are very limited players who are there in HI, and mosquitoes are not going anywhere. So we believe that a good double-digit growth is possible in this category. And for us, the focus is on liquid side of it, and which, as you said, and which is what we are doing well, we'll continue to focus on that.
Sure, sir. Thank you. That's all from me.
Thanks, Gaurav.
Thank you. Participants, if you have a question, you may enter star and 1. The next question is from the line of Zaki Abbas Nasir from Nasir Investments. Please go ahead.
Hello.
Yes, sir. Yeah, we can hear you, sir.
Yes. Sir, my 2 questions are that we have seen growth on the revenue from over December last year. Sir, how much would you attribute this to the inflationary aspect and how much to the volume aspect, sir? That is my question number 1. And also, sir, the segment of dishwasher detergent, are you planning to enter it? Because that is, of course, as of now, it remains a premium segment, but it may be a large segment later on. And sir, what is the cash balance on the book, sir? I think you have not given that figure. Thank you.
Right, sir. So our volume growth for this quarter has been around 7%. And I didn't get your second question. Which dishwash product are you saying that we need to?
That is the dishwasher tablets and dishwasher detergent. I mean, what is it?
So the dishwasher penetration for India so far would be very negligible. Once we start seeing a great momentum there, we will also be entering there. Right now, it's not our focus.
Okay, so that is not on the agenda right now.
Not right now.
Okay, and what about the cash balance on books? What would it be as of now?
Yeah, as of now, it's around 60 to 70 crores.
Okay, and I think we became net positive only 2 quarters back, right?
Correct, sir.
Thank you. Thanks a lot. And can I just add a small bit, sir? See, what is your feel on the inflation on the raw material front? So how do you see it panning out? Because maybe these things are just not sustainable, the way caustic is going up, the way lab is going up. I mean, what feel do you get? Do you think maybe after this quarter you should see a normalized price?
So all of us who have been in the business, obviously it surprised everybody. Now we have to be patient and we have to continue the business. And so, I mean, crude, as you would be observing, I mean, it's now $88. I mean, Brent crude, it's the way it's gone up. We don't know. Nobody can guess where it will, whether it will come down in a rush or whether it will remain there. So difficult to predict. But I think a lot of it, the prices, we see the index, I mean, the input inflation index, what we call it, has flattened, at least for a while. I mean, it's anybody's guess, sir, how the prices will move from here on. But we don't think it should sharply go up as what we had seen in the past. But we all can be surprised.
Thanks a lot, and best wishes for the next quarter, sir. Thank you.
Thank you, sir.
Thank you. Ladies and gentlemen, if you have a question, please enter star and 1. We have the next question from the line of Faisal Hawa from H.G. Hawa and Company. Please go ahead.
Yes, 1 second. Hello. So my question is to Jyothy. Why are we not taking up, the rural distributors, B2B, like, HESA or even Udan or even Moglix, to really ramp up the distribution much faster? And are we doing any steps to, revitalize our brand?
As a business house, we work with all of them, whether it is Udan and all other names which you know. And we work with them on a good parity with our general trade distributors. So there's nothing like that. We don't work with any one particular, or we work heavily with one of these alternate distribution channels. So like how we would focus on general trade, we have business partners, which includes all the other alternative channels. And we've been doing, normal business with them. And so we're working with all of them.
No, so I was talking more in terms of, a rural-based focus, like, HESA. They are like going to towns which are even less than 5,000 people in a village.
So, sir, there is definitely no reason for us not to work if we see a value in that. But having said that, it's always better that we focus on our own. And as Jyothy just mentioned, we have crossed 1 million retail outlets on a direct coverage basis. A lot of focus for us has been done in the rural market, which I just mentioned again, 500 plus sub-stockists we have added. We've added on a company-wide basis around 300 odd people on the ground. So all this thing is, unless we are doing it direct, it will not lead into any sustainable growth. So as while we work with all of them, we'll have to have both the approaches which make sense for us.
So is it that, as an organization, we are more adept at, doing the distribution the old way, and,
No, sir, we are working very well.
You are really not happy with the way that distributors are doing?
No. We are. Sir, e-com business is not 3 to 4% of our top line. All we are working with
My question was more towards B2B distributors, not towards e-com.
We are not against any B2B distributors. We are working as normal industry would work. We are working with all of them, and we have good relationship with them as well.
Okay.
Hope that answers your question.
Yeah.
Thank you. We have the next question from the line of Anurag Jain, an investor. Please go ahead.
Good afternoon. My question, I have 2 questions. First question is, what are the R&D expenses during the quarter and 9-month period? And my second question is, if you can throw some light on the new product launches expected in next 12 months, please, you may disclose whatever you are comfortable with on.
So sir, R&D is the backbone of a company. We are a homegrown company, and all the products which you see are differentiated products. They all come from our research. This thing. So we don't put a number to the R&D percentage which we spend. It's a part and parcel of our business that we have to focus on R&D and keep innovating products and be differentiated products which add value to the consumers. In terms of the innovation pipeline, every quarter we talk about it. Last quarter we had Ujala liquid detergent. Jyothy just mentioned that yesterday we had the Henko liquid detergent as well. So, this is a continuous journey. We will introduce products in the market where we see a long-term growth and which strengthens our overall brand equity. So those will continue to happen, and we have a decent pipeline on innovation which we'll keep seeing over a period of time.
If I may ask, Henko liquid detergent, it has been launched in which markets?
It's in the south markets.
Okay, thank you, ma'am.
Thank you. We have the next question from the line of Harsha from InCred. Please go ahead.
Yeah, hi. Thanks for taking my question. Are we looking to fill Mr. Kamat's position either by promoting someone internally or by hiring him from outside?
No, he was more from a strategic, contribution from him, and we have been running the business since last 2 years, and you have seen the growth happen quarter on quarter, and we don't have any immediate, anyone to fill in the position. I'll be running the company, and we have a strong management team, leadership team who will be running the company.
Okay, great. Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may enter star and 1. To ask a question, please enter star and 1. We have the next question from the line of Alok, an investor. Please go ahead.
Hi everyone. Thanks for taking my question. First of all, I would like to know, is it possible for us to give me a breakup of what would be the contribution of Henko detergents to our total top line?
It's around 200 crore plus brand, and that's where it's been doing well.
The next thing would be not kind of a question, but as a general observation, I basically come from this category C towns. Now, when we visit modern retail stores here, I literally find it very difficult to spot Henko detergents on the shelf of Big Bazaar and Reliance Retails, which are available in my hometown. So when we compare it with the other competitors, it's like their products are fairly nicely available on the shelf. So is it kind of like, do we really need to promote the products for larger visibility so that it pushes up the sales of our product?
I think sir, two things. One, we're doing good business with Big Bazaar and Reliance Retail and others. Definitely in your hometown, obviously it will be a good opportunity for us to be present and make sure our products are available. So it's a good input, and at the same time, a good opportunity for us to grow. And which place are you there, sir, if I can ask you?
Basically, I'm from Jharkhand. I reside in Ranchi. So prior to that, I moved back to Ranchi in 2019. Prior to that, I was in Bangalore. So I had the same observation in Bangalore itself. When we used to visit D-Marts or Reliance Retails or, hypermarkets, like it was really difficult for me to find out where exactly is the product located, because the product is far good in quality, the output is amazing, but if I go, I am searching for the product. If it's not available, I can't rent it out in a modern retail store. I then move on to a substitute, so which I believe might be affecting our top line for Henko.
Sure, sir. I think first of all, thank you for complimenting about the product. Yes, definitely it's one of the best products, and we will. I'm sure it'll be there in your next trips to Ranchi and areas. Otherwise, it's always available on e-commerce channels, and so you should not be deprived, or you ever want to figure that out. And I'll be more than happy. My email IDs are there on the website or on this presentation. If you could let us know which specific stores you've been looking at and the address, you can share it with us. We will make sure that next time on your trip you'll find those products there as well.
Surely I'll do that. Thank you so much.
Thank you, sir.
Thank you. We have the next question from the line of Kiran Nayak from Modi FinCap. Please go ahead.
Thank you for giving me an opportunity. Ma'am, I joined the call late. I am not aware. Any new products in the pipeline in the next 6 months or 3 months?
There are things, in the pipeline, like I said, yesterday we had launched Henko liquid in the South markets. We had also prior to that launched Ujala liquid detergents prior to this quarter. And you'll see as and when we launch we have a lot of products in the pipeline. So we would want to, concentrate on or focus on rather what we have launched to make it successful.
Okay. Thank you, ma'am. Thanks. Yeah. That's all from my side.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I would now like to hand the floor back to the management for closing comments. Please go ahead.
All right. Thank you, everyone, for all your questions. Very, very interactive. Really appreciate it. And I'm more than happy if anybody has any further questions or require any clarifications, please feel free to reach out to us or to the ISEC desk, and we're more than happy to provide any explanations on our business. Till the next time we meet, stay safe, and thank you very much.